Let's start off with those retail sales numbers, surprising to the upside. Growth of 1% is what we saw for March, and a better number for the month of February, contracting by only 1.3% as opposed to the 1.5% initially thought.
Yes, no, very good number. 1% is quite a lot more than people were expecting. I think the Reuters poll was about 0.4% increase. So it does show that the consumer is starting to stabilize and consumer spending is starting to pick up in the market. We saw Lewis's sales numbers come out, and they said that they were cautious about whether that the consumer was strong enough to continue this recovery. But so far we've seen the numbers come out, and it's a similar across the board, across into Europe even, as well as into the States, that we are seeing some of those retail sales across the board increase.
Of course, we saw 1% growth for March, and you're talking about the cautionary statements that we keep hearing from the retailers. Do you think that we're going to be seeing some pressure coming through from South African consumers going forward? Do you think we could see some volatility in the retail sales number?
I think if you take a look at Walmart's numbers yesterday, they were very good. They in the States also said they're very cautious, and I think where the caution comes from is unemployment, and unemployment numbers are staying stagnant, if not getting slightly worse. And I think that's where the retailers are worrying about whether this slight uptick in this recovery will be sustainable. So I think we have to take a look at those unemployment numbers, and if those unemployment numbers start to improve, then I think the retail sales will carry on improving. But I think that is why everybody's a little bit worried, because of the amount of jobs that South Africa has lost over the last year, and we haven't started to pick those up yet, and that's where the caution comes in.
Exactly, and when we look at the likes of Lewis, a good set of results, revenue increasing by 8% to 4 billion rand, profit margins also improving to 31.3%, 34.9% rather, from 31.3%. When you look at these numbers though, Rob, obviously a very good set of results.
Yes, they are a good set of results, but they're coming from a very low base. So I think that recovery picks up. You start to get a good improvement in your numbers, but then you have to have follow through from there. And I think that's also where the caution comes, because they've started from such a low base last year as the consumer fell away so aggressively. So the numbers are looking much better, but we'll just have to wait and see if the consumer can carry on spending, and if they've reduced enough debt to carry on spending on items such as furniture.
Raubex also came out with some numbers today. Revenue increasing by 10%. Order book, though, looking slightly weaker. Headline earnings per share, a gain of 11%.
Yes, on the road side, they're looking very positive. Their margins have increased to 19.4%, their operating margins. It's a very good margin to operate in. But on the road side, they're looking very good, and they've expanded into Namibia, into Zambia, and into Malawi. So looking very positive there. That order book down nearly 10%, which is a worry. They say they've got a lot of tenders waiting to come through this year, and you'll have to wait to see if they get those tenders. There's some very big and long-reaching tenders that are available currently at the moment, and if they get those tenders, then yes, they're looking very positive. But you'll just have to wait to see throughout the year if they manage to win those tenders. If they do, they're looking very solid going forward.
Well, in terms of their long-term outlook, it's looking kind of positive. Short-term, though, we are starting to see a little bit of pressure. Reason enough for you to buy and accumulate some of Raubex at this point in time?
I think the whole market is under pressure at the moment. On a very good pullback, you would like to pick up some Raubex. As I said, that operating margin of 19.4% is very positive. You'd have to look very closely, though, at those tenders that they are tendering for. If they start to pick up those tenders, then definitely Raubex at these levels a little bit lower is something to look at, but you'll have to watch those tenders.
Turning our attention now to Europe, and in particular Germany, surprise move to ban short selling on 10 financial institutions, CDSs and bonds as well. And clearly the intervention that we've been seeing has not received the thumbs up from investors, and we're seeing equity markets globally coming under pressure. Rob, what did you make of this move? Do you think in the long term it's going to have the desired effect? In other words, we won't be seeing a lot of volatility?
I think the sell-off comes just from really regulation as a whole. We see that the states want to implement some regulations. They haven't come out exactly what they will be. Obviously a ban on short selling on bonds, really, and just 10 financial stocks as well, or the biggest 10 financial institutions in Germany, so there's no short selling there. However, if you're trading on any European market besides Germany, you can short sell. So I think what has to happen is, if they are going to implement regulations, it has to be as a European Union. So you can short sell in France, you can short sell anywhere else. So it has to be a concerted effort throughout, and not just Germany themselves. So So it has impacted the markets, but regulations are a worry for traders around the world, and we just have to see how aggressive the politicians are in implementing these regulations.
Well, Rob, exactly, that's a good point, because it wasn't a coordinated move. We're also seeing some short positions coming through on the euro. 4-year lows again is what we're seeing against the dollar. Where do you see the euro going from here onwards? And I think we also need to appreciate that we've seen some positive economic data out of the eurozone, the likes of exports rising 22% and imports increasing by 20%.
Yes, there is underlying recovery again in the Eurozone, and the sovereign debt issue is now putting a dampener on that recovery. But as a whole, they are slowly recovering, and they're looking a little bit better than they were obviously about 6 months ago. The sovereign debt issue is a very big problem. The European Union, the euro at about 120, there's a lot of support for it there at 120. If it does break 120 to the dollar, you can see 117 and then 113. And those are, really going back down to very, very weak lows. We're already at the lows where we saw when Lehman's collapsed. But there should be some support at around the 120 level. If that breaks, I'll be a little bit worried. 113 on the euro then.